this game is no longer fair. And people know it, and they're mad, but they don't know. They can't put their finger on it because it's sophisticated. The guys who are running the show, they're they're smart, and they gaslight us. Jerome Powell starts every one of his conferences with, we're doing the best for the American people. No, you're not. You're doing the best for the bankers, full stop.
Sound money advocate Lawrence Lepard, author of The Big Print, What Happened to America and How Sound Money Will Fix It. It is so great to welcome you to the show. Thank you so much for taking the time to join me today, Larry.
Yeah, it's great to be on your show, Julie. I'm honored. I look at the list of guests you've got, and it's pretty damn impressive. I'm like, what am I doing here?
No, folks have definitely recommended you in the comment section, and someone connected us on X of all places that you should come on, and I'm thrilled to have you on. I finished your book over the weekend, and I have to say, okay, really, really impressive, because I also learned that you self-published this book, which is even more impressive because it is a bestseller. So, folks,
well, I don't know about bestseller.
It's a bestseller on Amazon. Yes, it is.
Oh, okay, fair enough.
Yeah, I checked today.
Okay, it's doing okay. Yeah,
it's doing okay, especially not having a publishing house behind it. But really impressive read. We read a lot of books on this channel. As folks know, we have a lot of authors who come on. If you're new to the show or if you've watched it, one of the places that we always start, Larry, is with more of that big picture, more of that macro view, that framework in which you look at the world. So let's start there. Help folks understand the framework in which you are looking at the world, how it relates to the broader economy, where we are today, and where you see things headed, because I got to say, it's not a pretty picture of where we're headed.
There's some ugliness in some areas.
Yeah.
So the book lays it all out, but to summarize it, hopefully crisply, for 40 years, investors have been trained to kind of buy the dip in stocks, and we've had a big deflationary trend. Interest rates peaked in 1980, and they've been headed downward all the way till, March of 2020, when the 10-year was at 50 basis points briefly. And that benefited all financial assets, all stocks, all bonds did extremely well in a declining rate environment. And COVID really kicked that over with all the money printing and stimulus. And I think we've now shifted the trend into an inflationary environment. And it's very hard to get out of one of those, as the 1970s proved. Paul Volcker had to take rates to 20% to get us out of that one. And he could do that because back then debt to GDP was 35%. Now it's 120. And so my big theme is that the mathematics of the situation suggest that we've got too much debt. The debt claims are much larger than the underlying goods and services. And that typically, historically, leads to either some kind of a monetary reset, some time of a collapse, like, the 29 and 30 depression, or, seriously high inflation, or some combination of all three of those. Very hard to know exactly what's going to happen because we really don't know what the government's going to do, what the policy moves are going to do. But what we do know is that if you grow the rate of debt in excess of the rate of GDP, eventually you run into a problem because you have to, suddenly print more money in order to be able to pay the interest on the existing debt. And this is what the brilliant analyst Lynn Alden, who, by the way, you should also have on your show.
We've had her on and we love her. We'd definitely have her back on. Yeah, we're big fans of Lynn. We'd love to have her back on.
Yeah, as she's described, it's just nothing stops this train. And it's sad what's going on in this country, that we've drifted away from the things that made us great, sound money and fiscal responsibility. And, kudos to Trump and Elon for trying with Doge to cut expenses. But as we can see, it's pretty damn hard. They started off thinking they could do 2 trill and then 1 trill. And then, now it's down to several hundred billion, if that. And then we just passed a big spending bill that, of course, is going to increase the debt going forward. So we really are in one of those situations where, all of the monetary rules are changing. And so the average investor or average person trying to figure out where to put their money, what to do with it, how to protect themselves, in the next 5, 10, 15 years, has to kind of rethink the rules of the game. In the past, the rules of the game were buy the S&P 500 index, do the John Bogle, passive indexing, and you did fine. And hey, if you bought the Mag 7, you did even better. Now, with some drawdowns. I mean, admittedly, the dot-com thing was a 50% drawdown. 2008 housing bubble, there was another 50% drawdown. But even out of those, if you bought in the bottom, they came back. And I think that's changing because I think the monetary underpinnings of all this are changing. The deflation is not there anymore. So, I mean, there are deflationary trends in technology. Don't get me wrong about that. And AI is is very deflationary. But the government situation and the debt situation is new. It's different. It's reached an extreme point. I mean, I thought it had reached an extreme point in 2008, and it had, and they printed a lot of money. And my book is titled The Big Print. You know, there really have already been two big prints.
But I assume there's another one coming then.
And I believe there's another one coming. But the first one was 2008, and they printed $3 trillion. The second one was 2020, and they printed close to $5 trillion. So, and I think there's another one coming just because of the math of the situation. So that's kind of the introduction to the big picture. And what, you know, the conclusion, therefore, just to tie it all up with a bow, is that as an investor, one wants to own things that the government can't print, because inflation is in our future, and the government can't print gold, and the government can't print Bitcoin. The government can't print silver. Government can't print real estate either. Real estate's got some issues with taxation and so forth. So my number one investment choice is Bitcoin, but gold is quite closely right behind it. So that's kind of where I'm at.
Yeah, we'll get into all of that as well. So many threads I would love to pull on here and explore further with you. One of the passages from your book that I highlighted was, we're watching the endgame of a decades-long monetary experiment. As noted earlier, the Fed has two options: allow the debt structure to collapse, or print money on a scale that will fundamentally reshape the value of the dollar. Given these choices, history suggests that they will choose inflation every time. The only question is how devastating that inflation will be. So, two options here. We know, it sounds like your thesis here is that they're going to go for the latter, which is printing. We have yet to see the big print. As Paul Tudor Jones has put it, and you quote him in the book, all roads lead to inflation here.
Yeah.
I want to explore that concept. I want to explore that further.
Sure.
And help us understand, like, how maybe more of what was the catalyst for you to, one, write this, but two, like, when I read your book, this is something I get, like, the reason you self-published is this is a dire situation. You wanted to get it out fast. There was a reason behind that. Help us understand a bit more of, like, your thinking, the catalyst for you, and just how dire the situation is from your vantage point.
Yeah, I think it is reasonably dire. And yes, I could have gotten a publisher, but they were all saying, you're 12 months away from a book. And I was like, well, 12 months, it might have already happened. So that was the reason I went with the self-publishing. What drove me to write the book, Julia, is I was sitting around last spring with my wife. We were watching a political show, and I watched a bunch of people on both sides, blue and red, yelling at each other over stuff that was incredibly stupid. And I thought to myself, the underlying problem here is with the monetary system. The reason why things are so rough right now is because the money is broken and everybody is suffering badly from inflation, and that causes people to lash out on both sides. I mean, it used to be a much more civil country. I mean, don't get me wrong, politics has never been completely civil, but it's gotten particularly toxic here in the last 5 or 10 years. And I just thought, somebody's got to say this. Somebody's got to try to point out that if we fix this monetary system, a lot of these other problems are going to fix themselves. And I really do strongly believe that sound money is what brought America to its peak. I mean, I think peak America was 1946. I mean, after we won World War II, we were a moral country. We were the good guys. There was really just nothing wrong with this country. Not to say we hadn't done bad things. I mean, the Trail of Tears and what we did to the Indians, what we did to the slaves. I mean, there were a lot of things the country had done wrong. But the point is, in 46, we stood at the top of the world, and we pissed it away. Slowly but surely we pissed it away. And here we are, 60 years later, or more than 60 years later. And, it's just a mess. Excuse me for just a second. I'm going to kill this phone. And so that was why I wrote the book. I also wrote it because I wanted to try and help people. I think that the average American, that what's going on with Keynesianism and fiat currency and inflation and the government and the Federal Reserve, it's all a very sophisticated fraud, in my opinion. And it hurts the average American. The wealthy are getting wealthier. I mean, there's a chart in the book, right in the beginning of the book, that shows that the top 1% controls 90+% of the wealth. And I looked at that and I just fell out of my chair. I was like, this isn't the country I grew up in. When I grew up, we used to have a middle class, and the middle class in this country is suffering very, very badly. And the lower middle class is really suffering. And that's because their wages don't keep up with inflation. And yet the people at the top know how to game the system and get rich off inflation. And so I wrote the book to try and help people to help them see at two levels. One, politically, so that when we get some sound money leaders coming forward in the future, people vote for them. But then also tactically, just, okay, yeah, the system's broken. These people are inflating your savings. They're making you suffer by not letting your wages go up as quickly as inflation goes up. You got to protect yourself. If you can save money, you've got to put it in things that are going to outperform inflation. And so, the first half of the book is kind of negative, to be frank, but I didn't mean it to be negative. I just meant it to be factual. And I feel like somebody had to tell the story. And I have the benefit of being almost 68 years old now, 67, 68 in about 3 weeks. Somebody had to tell the story and explain how we got here, and then, given that we are here, how do you protect yourself, and what can we do to fix it? Because this is a great country and we can fix it, but, we need to, it's going to require monetary reform. And I don't, it's not as though I just kind of throw it all out there as it's a mess and we got to do something about it. No, there's chapter 22. I wrote the speech I think the president should give to talk about how we are going to reform the monetary system. I mean, there are concrete suggestions in this book. I mean, there's a way to fix this. It's not impossible. It's not going to be simple, but it's not impossible.
Yeah. One of the things I really liked about the book was the opening scene, or the way you opened it up, calling out Tim Geithner at HBS. You were in an auditorium, and it was, what was he saying around, like, it was like eye for an eye justice, like the solving of the financial crisis. And you were that one person, that one voice that stood up and said something.
I mean, look, there are times I kind of regret sometimes having done that. It's like, I mean, I was definitely the turd in the punch bowl, and maybe I should just let them have their little party, because I was the guest at HBS, although I went there, but I just couldn't stand it, Julia. I sat there and I listened to them. I mean, they were really kind of cocky and marching around the stage about how they saved the world. And it just, I was like, no, you didn't. You made the bankers rich, and you continued the corrupt system that allowed you to get rich at the expense of everybody else. And somebody had to say it. But like I say, I got a lot of nasty comments, a lot of angry stares, and a lot of negative feedback about having done that. But there were a few people who came up to me afterwards and said, "Man, that took us. That was right, and I'm glad you said it." So some people know.
Yeah, it was Geithner who said your comment was eye for an eye, Old Testament. Well, that's right, Old Testament.
Eye for an eye, yeah.
I don't know. I think it says something about you, like the being willing to be like brave and say what probably is on the minds of a lot of others, but most people are like way too afraid to like stand up and say something.
Yeah, maybe. I don't know if it's bravery or stupidity, but
I don't know. I think we could use more of it.
I mean, I'm constructed. I mean, people who know me and know me well, I'm constructed in a certain way, and I just can't change. So I'm just going to keep on being the way I am, and it's been a real benefit for me in some parts of my life, and it's also been problematic for me in other parts of my life. But it's too late to change now.
Yeah, I think sometimes, like, reading the book, the way you describe things, it's like, I think a lot of folks out there, they feel it, they sense it, but you have a way of kind of like putting your finger on the pulse of it. So we should probably bring up the Fed and all of this as well.
Yeah, sure.
Okay, so here's what you wrote about the Fed. You said, at its core, our monetary system is broken because the price of money is set by a banking cartel, the Federal Reserve. Think about it. 12 voting members of the Federal Reserve Board decide periodically what the price of capital, interest rate, should be. 12 humans in a country of more than 330 million Americans have an immense influence over financial markets. Our founding fathers would be appalled.
It's a fact. I mean, founding fathers, I think, believed in free markets, and free markets allow supply and demand to set prices. And the price of capital is the most important price in the entire system, because it tells you where and how much to invest, and where and how much you invest determines how much productivity you have. And the reason that capitalism has made people, much wealthier over the decades and centuries is that we continue to figure out how to do more with less. And we do that because when the interest rates are set correctly, and by trying to set them by committee. I mean, God himself couldn't select the right interest rate, just like God couldn't select the right price of a car or anything else. I mean, the marketplace determines things. It's the supply of savings against the demand for investments. That's the interest rate, and it should be set in the market. It's totally common sense. I mean, everyone knows. In fact, in the book, I talk a lot about Judy Shelton, who I really admire. And she talks about, she studied Russia very heavily. And, the reason the Russian economy collapsed is because they had state pricing. The state set the price of things, and they always ended up with either a surplus or a shortage. So free markets are what give us the best outcome. And the thing that's so tragic, Julia, is that, we've got all these technological things that have made our lives a lot better. I mean, here you and I are talking from different parts of the country in real time. People can see it all over the world. It's fabulous. They're great technical developments, but we should be living even better than we are now. And if we had been setting the price of capital correctly, our living standards would be much higher today than they actually are. I mean, just other things, like if we hadn't spent $8 billion or $8 trillion, in wars in the Middle East, think of if we invested that in infrastructure and other things. I mean, it's tragic. And all of these things go back to the monetary system, which, people, use to get wealthy. And, it's not fair. I mean, that's the other thing. I mean, the founding ideal of this country was, it wasn't that everyone would have the same outcome. It wasn't socialism. I mean, people have different talents and some people will do better than others, but it was that the game would be fair. And, that was the premise of the Declaration of Independence and generally the Constitution. And we've slipped from that. This game's no longer fair. And people know it. And they're mad, but they don't know. They can't put their finger on it because it's sophisticated. The guys who were running the show, they're smart and they gaslight us. Jerome Powell starts every one of his conferences with, we're doing the best for the American people. No, you're not. You're doing the best for the bankers. Full stop.
You're right. Like, it's not that it's like not everyone like living on the fiat standard is malicious. Like how?
Right.
It's not. Yeah.
No, some of them don't know any better. Yeah. I'm not suggesting everybody who likes fiat is a bad person per se. Some of them do.
Did the mandate change? Like how did we get to where we are now? Like, because it seems like the focus is a lot of focus of people feel like it's the financial markets, not Main Street.
Yeah, well, there are lots of little steps. It was incremental decay, right? I mean, you can go back to the War of 1812, and I walk you all the way through the history. I mean, the Civil War, Lincoln created fiat by printing greenbacks. The Federal Reserve got created, which is a backstop to the banks, which allowed them to increase the money supply and and basically have a one-way bet where they would win in either case.
1913, yeah.
Yeah, 1913. I mean, the Depression, which was driven by Fed missteps. I mean, it's, going off the gold standard in 71, getting rid of Glass-Steagall in 99. I can just point to instance after instance. I mean, taking away the commodities futures regulation so that Enron could fail. And that's the other thing I really tried to do in the book. I mean, I just came back from a Bitcoin conference. It's great. I met a lot of young people. They're Bitcoiners. They're so excited. And, a lot of them have read the book and they said, gee, thanks. Because, in 2008, I was in high school,
Mm-hmm.
I didn't know these facts. I didn't know that the wife of Morgan Stanley's president got a $200 million, loan at 0% interest rates. I didn't realize that Phil Graham's wife was on the board of Enron, and Phil Graham, changed the commodities laws so that Enron could do what it did and create an enormous fraud. I mean, there's just been so much corruption, and with every step, the bankers and the politicians have done things to benefit themselves, at the cost at a cost to the rest of us. And, they end up wealthy and we all pay more for groceries. I mean, that's really kind of the bottom line.
You do write like a lot about the history, and you do, as you point out, like you make this book, it's like accessible for anyone. Because a lot of financial books can be quite dense.
Yeah, it's not simple. I try to write it in a storytelling style. And by the way, there've been a lot of great Bitcoin and other books out there. And by the way, I borrowed from a lot of them. What I think what my gift or my skill was to kind of bring up highlights of all these things together in one place and make it easily understandable. And you can't be a dullard and get it. But if you've got just a basic level of intelligence, you don't have to know anything about the financial markets. And I think you can read it and you go, oh, yeah, now I see it now. I get what they're doing to us. I understand how it happened. And then hopefully, it's kind of like, all right, well, given that, what am I going to do?
Going back to like these kind of catalyst moments, you're talking about how, cheap money helped asset prices soar.
Oh, yeah.
Yeah. So one of the things you bring up is that you thought that 2008 was the big one.
Yeah, I did.
But you were terribly wrong.
Yeah.
You talk about the everything bubble they created is a bubble in the currency. if/when it burst, there is no higher level to reinflate. I thought that was interesting, so I highlighted it. Can you expand a bit more? We often hear folks talk about the everything bubble, but this is the first that I've seen it kind of articulated as being in the currency.
Yeah, that's been out there for a while. I mean, I think Jesse Felder might have been the first to use that term, but
I haven't had him on my show yet, though.
Oh, he's great.
I haven't. No, I haven't had him yet.
Oh,
so.
yeah. Oh, you should get him. Yeah. Others have used the term as well. I mean, I think that
I've definitely heard the term, but I haven't heard it.
Yeah. So a
back to
bubble
the
generally
currency.
comes when an asset category, a lot of money flows into an asset category, gets way ahead of itself. And a couple of recent classic examples of the dot-com bubble, and I participated in that to a degree. I mean, the internet was a huge development, and a lot of money flowed into it, and rightly so. I mean, the internet is obviously a big deal, but of course, it got way ahead of itself in 2000, and a lot of stupid ideas got pushed forward and didn't work. So that was a bubble. The housing bubble was another one. I mean, and it actually grew out of the crash of the internet bubble because Greenspan and others, they took the interest rate down to 1%. I remember Alan Greenspan going out and saying, "Oh, you should take a home equity loan against your house." I mean, what an incredibly irresponsible thing for a central banker to say, but he did. And so they blew a bubble in housing. And then, of course, everyone realized that, houses weren't going to go up at 30% a year forever. And so that collapsed. And so in order to deal with that, they took interest rates down. And this is what amazed me, Julia. They took them in 2008, 9, late 8 and early 2009. They took it down to ZIRP. So I'd never heard of that before. I mean, even in the housing bubble, they took them down to 1%, not ZIRP. ZIRP stands for zero interest rate policy. So basically, I think they were like 25 basis points. So what that meant is if you were a rich person or a banker or a hedge fund or a trader, you could go and borrow money from the Federal Reserve for 25 basis points, turn around and invest it in something that yielded, much higher yield. I mean, that was a formula to get rich if you had the ability to make that loan, to borrow at that price. And so, of course, what that did was it reinflated the economy. And I get it. I mean, for a couple of years, fine. We were in a crisis, 09, 10, fine. But they kept it there until like 2015. So it was like, 6 years of it. And then they started to slowly, ever so slowly, creep the rates up. And then, Powell had to pivot and take them back down again in 2019. And so from 2019 to 2022, money was free. And I mean, money being free is kind of a tautology. I mean, if you have money, in theory, it has value. If it has value, you ought to earn interest on it. But what the Fed said is, no, we're going to make money free. We're going to just make the rate of interest zero. And so, it distorted everything. And what it led to was all these carry trades where people would borrow money and put it invest it in something that would yield, and they would get rich. And so, but what it also did was it inflated the value of all those purchases over and above, the value of the real money. And so what we've got is, what really has value, money represents a claim on goods and services, and goods and services are what have value. Money is just the medium that you use to buy it with. And when you create a ton of money like we have, the value of that money just goes down. And so you've kind of got an everything bubble. And, if you wanted to end the everything bubble, you'd have to stop the debt creation. But, everyone fears doing that and knows, the Federal Reserve knows that if they were really to do that in a meaningful way, we'd have a downturn that would look like the Depression. And of course, they're terrified of that. So, so right now, to Powell's credit, he tried to, he realized he'd overdone it in COVID. And of course, he was totally wrong when he said that it was transitory. Any, first level economics student could have told him, you increase the money supply by 40%, you're going to have inflation, but he didn't know that. Or he was gaslighting us and said, it's transitory. And then, along comes the, along comes the serious inflation. He's like, oh shit. And, he takes the rates up incredibly quickly, and he claims to be Paul Volcker. Well, the problem with that is that blew up Silicon Valley Bank and, a bunch of other banks, First Republic, et cetera. And so, and he's tried to get things back under control, but as a practical matter, he really can't, because the deficits and the debt keep growing. And so this is the doom loop that, the reason I say that they're eventually going to have to print, the thesis behind the book is they will be forced into printing. And that's because people are going to come to realize that they can never stop growing the underlying money supply. And once they realize that, if you study the historical examples of this, and look, I'm not the only one saying this. Really smart guys like Ray Dalio were talking about this debt crises and so forth around the world. Once everyone realizes that you can never stop growing the money supply, inflation, you can't get it under control. I mean, it's going to run until the natural end of the currency. So, and my sense is that we have a lot of inflation in our future, and therefore I wrote the book to try and help protect people from that.
Gold prices have been breaking all-time highs this year, but price appreciation isn't the only way to profit from owning gold. You can earn a yield on gold paid in gold without selling your gold or silver. Unlike dollar yields that can be slashed or even go negative, a yield on gold paid in gold means more ounces in your account every month, not paper. Monetary Metals is revolutionizing the way people invest in gold and silver. Instead of paying to own the metal, now you can get paid to own it. Right now, there are opportunities for you to earn 4% on gold paid in gold in their marketplace. The interest you earn is paid in ounces of physical gold or silver, which you get in addition to any price appreciation that comes from gold and silver during the year. The question is this: why earn in dollars when you can earn in gold? Join thousands of investors who are earning a yield in physical gold and silver every month with Monetary Metals. Visit monetary-metals.com/Julia to learn more. Yeah, you're talking about the debt doom loop where new debt is incurred to service the old debt.
Yeah.
Are we already there in that loop? Or
We really are. I mean,
yeah.
if you look at the math, I mean, we're...
yeah, explain the math for us. That's interesting.
Sure. I mean, so, well, first of all, when Powell took interest rates up, the federal debt, the interest on the federal debt went up substantially. It was in the 400 range. It went up to, it's running at like 1.2 trillion annualized. So, that happened, and that's a problem. Inflation went up a lot, and the bond market sold off. And the doom loop, as briefly described, is that the federal government runs a deficit. How do they pay for the deficit? They borrow money to pay for the deficit. That increases the amount of debt outstanding in the system. So somebody has to buy that debt. And the person buying that debt says, what interest rate are you going to give me for it? And if there's a fixed amount of people willing to buy it and the amount of the debt goes up, well, then the interest rate by its very nature, supply and demand, it's going to have to go up too, because some people say, well, I'm not going to buy it at 3%. You got to pay me 4 or 5 or 6% to buy it. Well, that's fine. So let's say interest rates go up to 5 or 6%. And as they did, they went up to 5% in the fall of 23, and the Fed panicked. That's when they talked about they weren't going to keep raising rates. And so when interest rates go up like that, it creates a bigger burden for the federal government, because the federal government's got $37 trillion of debt. And, this year alone, 7 to 9 trillion, depends on which estimate you believe, are going to roll over. So higher interest rates, that rolls over. Well, then they got to pay more on the debt. Well, that paying more means that deficit gets bigger. That means they got to sell more debt. You see what I'm talking about here? It's like a vicious circle.
That is the doom loop.
That's the doom loop. So, okay, hang on a sec. So you got to sell more debt. Well, you sell that debt in the market. Well, that means you're going to push the interest rate up. Higher interest rate. That means you're going to have a bigger deficit. That means you got to sell more debt. So that's the doom loop, and that's kind of the bigger picture of what's going on. And I don't really know how to get out of it. I mean, without the currency collapsing. That's the problem.
Okay, let me ask you this. Are we already seeing those signs then show up in the bond market?
We are.
I take it that's where you want to be paying attention to for the signals.
We are. So we just saw, and it came back in quite a bit recently because the Japanese obviously intervened, but we just saw the Japanese long bond, the JGB 40-year go up. The rate on that went up really substantially, very quickly. We saw it in Britain in 2022 when Liz Truss said she was going to increase expenses and cut taxes, and their bond market went up, and she had to reverse her policies. We saw it in the U.S. in the fall of 23 when our rates went up over 5%, and the Fed immediately came out with 10 people saying, no, we're not going to keep raising rates. We've seen it just in terms of the two biggest assets. The clues that this is going on, Julie, in my opinion, are watch the assets that are anti-bubble, and those assets are Bitcoin and gold. And since 2020, the price of Bitcoin is up 2,000% compared to the sovereign bonds, the long-term sovereign bonds. And the price of gold is up 250% compared to the price of sovereign bonds. So what that tells you is that the markets are saying, hey, we don't trust these governments not to keep printing a lot of money and debasing the value of these bonds. Oh, and by the way, we do think these other assets, gold and Bitcoin, which can't be printed, we think they're more attractive compared to bonds. That's what the market is saying loud and clear. And my sense is this is just the beginning of a trend. There's some people who say, well, gold's run awfully far, or Bitcoin's run awfully far. It's got to be a bubble. It's going to come back in. And I say, no, au contraire. We're actually just getting started.
Yeah, I'm looking right now. Our friends at Kalshi, the prediction markets, just looking at the Bitcoin forecast, how high will Bitcoin get this year? The current forecast has it at 136,000 just for this year alone.
Yeah.
I don't know if you're a price target person, but
I know Kalshi.
yeah.
I'm not familiar with that specific projection, but that wouldn't surprise me. Higher wouldn't surprise me. I don't think we're going to see below 100,000 again, but we could. I mean, Bitcoin's very volatile. There's no doubt, and it still retains some correlation to the stock market. But I think over time that's going to disappear.
Yeah, but those are also just the signposts to look out for. All right, so you mentioned gold, you mentioned Bitcoin, but we should probably just back up and maybe define sound money. Folks who watch this channel will definitely have been exposed to that concept, but anyone who's not familiar, let's just start there. Explain sound money.
Let's do that. So, money really plays two different roles. One, it's a savings vehicle. You hope to retain, value through time and space. So if you do some work and, you don't want to eat today, but you want to eat in the future, you save your money so you can do that. And then money also is a medium of exchange. You use it to buy things and trade for. And when you're using it as a medium of exchange, the inflation is not necessarily as important because you might get money and spend money and you don't really see much slippage between the time you receive it and the time you spend it. But as a store of value, it's very important. And over time, what happened historically in the world is that humankind kind of naturally, not driven by governments, gravitated toward forms of money which couldn't be debased. And we tried a lot of different things. I mean, seashells, tobacco, you name it. But 5,000-6,000 years of recorded history, and gold and silver kind of became the de facto accepted best forms of sound money. And the reason is that they are geologically limited in their supply. The supply of gold grows at 1.7% a year. And so, for money to have value, it's got to be scarce. This is why monopoly money has no value because, the Parker brothers can print an unlimited amount of it. And so, and in theory, when the U.S. was behaving responsibly, and when we were on a gold standard and the dollar was backed by gold, well, the dollar was sound. But what slowly happened, as the book describes, is that we just kept knocking out the little, the supports underneath the dollar until eventually in 71, Nixon locked out the very last one. And now the dollar has no backing. I mean, it's backed by the faith and credit of the federal government, which, how good do you think that is given all the deficits they're running in their balance sheet? But sound money was always money which was scarce, which could not be just, printed out of thin air. Fiat money, the experiment started hundreds of thousands of years ago. The Chinese tried it, others have tried it. Fiat money was always by definition money that governments by fiat said, this has value and I declare that it has value and you will accept it. And, if it was done responsibly, if a government said, well, gold and silver, will be money and they'll be we'll make coins, and they will be made of gold and silver. So there's intrinsic monetary value there. Well, then the inflation might have been lower, although, people tended over time, what they did was they clipped the coins or they would dilute, like in Rome, they started off with silver coins, they ended up with iron coins, and so, there's been a trend all throughout humankind for, this goes back to the Bible, right? I mean, there's a chapter in the book called, sound money is a moral issue. And I really believe it is because people in general, we're not all perfect and people will try and cheat if they can. And, the authors of the Bible know this because they talked about using honest weights and measures and saying cheating in weights and measures is an abomination to God. And so, basically, money is a weight or a measure and it ought to be sound in the sense that it shouldn't be variable. I mean, an inch doesn't vary, a foot doesn't vary, a gallon of water doesn't vary. I mean, we have measures of things and yet we've got this elastic currency that is always continually kind of losing its value. And so we're trying to build an economy on something that is always moving around. And that, from an engineering point of view, I think engineers can understand that that's just not going to work. If the definition of a foot varied all the time, how would you build a house? So, that's another way of kind of looking at it.
And isn't it? Remind me too, because I believe in the book. I liked the biblical passages, but it's also part of like our Constitution
Absolutely.
too, like sound money.
Article 10. Yeah.
Yeah. I think maybe what you're kind of getting at here is it's the fall of the fiat. That's the big picture here. And it's the reintroduction, if you will, I suppose, of sound money then.
That's right. I mean, I think, there's certain universal truths, and, we all kind of know them, thou shalt not kill and whatever. I mean, many of them are, in the 10 Commandments. And, they're just certain universal truths. And, sadly, throughout the development of the 20th century, Keynesians and economists and people in government kind of forgot one of the basic truths, which is that money should be sound and that things will run better on a sound money system. And they led us down this garden path of, no, trust us, we can manipulate the money. It's going to make things better. We can smooth out these ups and downs. Of course, they've only made them worse. And they created enormous unfairness. Because what happens when you have a monetary system that's manipulated by the Federal Reserve, the bankers, the government, et cetera, which is really what ours is, they can game the system in their favor. I mean, full stop. And the average working man, doesn't have any way to protect, or woman to protect themselves from it. I mean, this isn't some new revelation that Larry came up with. I mean, Daniel Webster wrote this in the mid 1800s. He said, inflation is the surest way to fertilize the field of the rich man with the sweat of the poor man's brow. I mean, people have been doing this for a long, long time. Inflation helps the people who know how to benefit from inflation. That's just a fact. And so if we collectively as citizens of America and of the world want to have a fair system, we need to vote for politicians who believe in sound money. It's just that simple. I mean, Ron Paul was right. And, and we need everybody to understand that. And, I kind of believe I'm spiritual, and I kind of believe that, this whole thing is taking a path that a higher power has led us down. And, it's kind of like, well, we weren't going to get that lesson on our own. So guess what? We're going to have a very serious hyperinflation, and people are going to learn this lesson the hard way. And we're going to go back to sound money. It's funny. I have a lot of friends, and you probably do too, from other countries, and particularly South America, that's had a lot of inflations. And they really get this issue pretty well. I mean, if you live through Argentina, or if you live through Brazil, which had a couple if you've lived through a hyperinflation, you understand how important sound money is. The United States has been sheltered because for many, many years, we were quite responsible. We didn't have an issue with this. But sadly, just like so many other things, eventually our system deteriorated as well. And here we are, with the wrong system based on Keynesian fiat money, right? And it's a problem. It's just a problem. But I don't know if you picked up on the stuff in the book that I also think is important, is the fourth turning.
Yes, I was about to ask you about the fourth turning. We've had Neil Howe on the channel.
Isn't he great?
We're due for an annual check-in with him in July. It's like the equivalent of like a financial or monetary fourth turning, maybe. I
think that's right. And it's funny. I've watched Neil's videos, and he's a brilliant man. And that book was a brilliant book. And I've used it as a model for a lot of what I'm looking at that's going on. It's interesting to me, though, that he doesn't focus in. I think this fourth turning is all about the monetary system.
I've seen other folks who've taken the framework and then kind of used it a bit of taking a different angle on the fourth turning.
Exactly.
Yeah. But we're in the fourth turning right now.
There's no doubt. Yeah. There's no doubt. It started with 2008. It typically lasts about between 20 and 30 years. That would take us to 2028 or maybe 2030.
2030-ish, yeah.
30-ish. And I think what's going to happen is this monetary system is going to fail. And we're going to have to, and I don't know to what degree or how fast, whether it'll be hyperinflation or whether it'll just be high inflation. But I think it's going to become obvious to a large group of people that the monetary system's broken. And we either need to do a reset, or it's going to run to its natural conclusion where the currency will fail. And then we'll do a natural reset where everyone will say, well, I'm not accepting dollars anymore. You pay me in gold or silver or Bitcoin. So one of those two outcomes is coming. We just don't know which. We don't know how it's going to unfold. It has a lot to do with the policies. I mean, Besant said he wants to, preside over the next Bretton Woods. And, God knows, I hope he does. I hope he comes out and says, we're going to do a reset. I mean, that's what really needs to happen. Roosevelt did it in the 30s. It helped a little bit. In 34, they got a nice bump out of the economy when he devalued the dollar by 70%. I mean, it was an evil and, immoral act to steal from the gold holders, because he grabbed their gold and then he devalued the gold or the dollar. But it actually did help. And it's what needs to happen here. We need to devalue this debt because we can't pay it back. We just can't. And it's going to be a painful step. But the way I talk about it in the book is like it's better to rip off the Band-Aid rather than just kind of pull it off slowly and suffer, this broken system for another 15, 20 years, And I think we're going to have to rip it off because I think events are moving in a direction now where more and more people are seeing the problem. And if you study other hyperinflations, what you see is that the currencies fail when everybody realizes that the money's no good. Right now,
but right now, not everyone has. Yeah.
Yeah, I realize it. And, I'm guessing 5% of the country probably realizes it. And 10 or 15% of the country probably suspects something's wrong, but can't put their finger on it. And both of those numbers are going to grow. And as they do, it's going to happen.
Maybe it's kind of like you at HBS again, and then people kind of come up to you afterward and say,
"Yeah, maybe." I don't know. I mean, the book was designed to help people see that.
Yeah.
You know what I mean? I mean, to me, I have very little doubt that my grandkids will purchase things in satoshis.
Yeah.
The unit of account from and that a dollar will be,
which is the unit of account for Bitcoin.
Yeah,
the satoshis.
Smallest unit of account.
Yeah. Maybe you mentioned like your kids, grandchildren, like talk to me a bit about like, it feels like sometimes like the younger people kind of get it the worst right now, or at least they're going to kind of deal with the brunt of it. It kind of stinks. Like I complain all the time on this show that I want to buy a house, but like the starter homes, I mean, I'm noticing prices are coming down and there's a lot more inventory these days. So I need to do another housing episode, but it kind of has felt like unattainable in the last couple of years, basically since the pandemic.
My kids are all in their 20s. Well, actually, that's not true. My daughter just turned 30, but my other two sons are in their 20s. And it's horrible. It's absolutely horrible. I mean, you guys don't have nearly the chances that we had, when I was starting out. And, but it's, nature's healing and this thing's going to get rebalanced, and a lot of that boomer wealth is going to be devalued. And what what young people do have that boomers don't have is you got your whole life in front of you. You got a lot of energy, and we're going to have a great world on a go forward basis. And, AI and productivity, there's going to be a lot of great stuff happening that are going to, your lifestyles are going to get a lot better. Housing is not going to be as important to you probably as it was to us. I know it's not as important to my kids. They're more into experiences. I think the nice thing about I call you guys, and I don't know exactly your age, but
I'm a millennial, but I'm in my late 30s now, 37.
Right. So you guys are kind of the new hero generation, and
we are the heroes. Yeah.
You seem to be much more focused on, the overall good of society. I know my kids are much more focused on, whereas my generation was very much focused on, I want to get mine. I want to have a BMW, or whatever it might be, and it was amazing to watch the transition too, because they went from being, stop this war and protests and everything else to, give me a suit and a BMW. It's like the big chill, right? Give me a suit and a BMW and a couple $1 million, I'll be happy. But I think, I think what society is evolving in a positive way, because I think your generation gets it, much better, that we all have to succeed together, and that massive wealth inequality really doesn't make for a great world. But that's, it'll get fixed. I mean, when the money gets fixed, a lot of these other problems will naturally solve themselves, in my opinion.
Yeah. Okay. So let's talk about, maybe from an investor perspective, how are you thinking about how you want to be allocated to sound money? What does that look like? And I know it's different for everybody.
Yeah.
Yours might not be the same as for me, it's not financial advice, but just help us give some color.
I'm not technically allowed to give financial advice, although I am an RIA. But I mean, I think I say this in the book, and it's just a general, it's not financial advice for any specific person. It's just a general comment. I think that people who don't have, call it 20% or 30% of their investable savings or assets in things that represent, tangible sound money, I think they're going to experience regret in a 10-year time frame. And by that, the things I would put in that bucket would be houses, because you can't print them, silver and gold, because you can't print them, and Bitcoin, because you can't print them. Stocks, I would put they're kind of in the middle. It depends on which ones, it depends on what timing, it depends on valuations. The stock market's pretty overvalued right now. But in general, stocks always reprice in whatever the new currency is. So even if we go through a currency event, stocks may go down for a while, but if they're sound companies doing sound things, they'll reprice and be good places to have capital. So
you mentioned in the book too, like chapter 22, I believe you talk about the fixes and the speech you would give if you were president.
yeah.
Can you give us some more insight into like what the fixes are?
Yeah.
Or the most important ones.
So basically, I think we need to make everything that's money, which is to say, I mean, and the proposal in the book is that we make gold, silver, Bitcoin, and the dollar, they're all legal tender, and we let them compete with each other. There's no capital gains tax on any of those. I mean, you don't pay a capital gain on the dollar. A dollar's just a dollar. If gold goes up in dollar values, there should be no tax on that because these are all forms of money. So I'd start there. Then I would say we should eliminate the Federal Reserve, just literally shut it down. If we want the dollar to survive, we should either back it by gold or back it by Bitcoin or some combination of the two. And that would make the dollar sound. If not, I think the dollar would go away in a freely competitive system. And that really kind of represents a reset where, the government might come out and say, okay, well, we aren't going to, if the Fed's gone, so they can't print money, we aren't going to create any more dollars. The number that exists is what exists. And we're going to back the dollar with gold or back the dollar with Bitcoin. And the government stands willing to exchange the dollar for those two assets. And so they would all find their natural price against one another. Like the final thing we need to do, because it's a real problem, is we need to eliminate the FDIC. The FDIC is what supports all the banks. And this is what allows the banks to take big risks. When the banks take big risks and they fail, we print money to bail them out. And that money that we print is what makes our grocery costs go up. So basically, it's an asymmetric world for bankers. Bankers can make money in whether they do things right or wrong. They make money both ways. And so, because we pay for their mistakes. And so if you took away the FDIC and you made everybody at risk with their deposits in banks, watch the banks reform themselves very, very quickly in order to get your deposit. In other words, they're going to have to behave in a very responsible fashion.
All right. So let me ask you this then. Who wouldn't want to see this?
Well,
who would be
the government, the Federal Reserve, the government, and the bankers, and the Cantillionaires. I mean,
oh yeah, you should bring that concept up. Explain the Cantillionaire concept.
That. Yeah. So if you have a system where some people can borrow money very, very cheaply and use it to buy assets, and everybody else has to, if they want to borrow money, the only real cheap money they can borrow used to be for their house. When mortgages were 3%, now they're 7%. There's really not cheap money, but, you and I, we can borrow money from the credit card companies, but that's at 25%. I mean, the mob would blush, right? And so when you have a system where the people who have a lot of money and are in power and at the top of the pyramid can borrow very cheaply, they can invest that in things that give them a high yield. And so it's called the Cantillon effect. There's a guy named Richard Cantillon, who was a guy back in France in the one of their great inflations, the John Law inflation, who observed that when you're printing a lot of money, the people who get it first can benefit because they can buy assets cheaply and then the assets go up in price. And so we call them Cantillionaires, which is to say the financial people who know how to game the system get rich at the expense of all the rest of us. And this is why, you see these private equity people and hedge fund people, they've literally made hundreds of billions of dollars, by just shuffling paper. They borrow at a low rate and they invest at a much higher rate. And it's great work if you can get it. And by the way, it's worse than that, because if they fail, they get bailed out like the banks did in 2008 or like Ken Griffin did in March of 2020. When the basis trade went upside down, he was clearly bankrupt. But, he has Ben Bernanke on his board of advisors. Bernanke probably made a call to Powell and said, look, this guy's 20% of the market. If you don't give him a swap line, he's going to fail, and all the Wall Street banks will fail. And so, they gave him a swap line. What I'm describing here is a system that this is not a fair game. You're not Ken Griffin. I'm not Ken Griffin. We don't get to play by those rules. The average guy doesn't get to play by those rules. The average guy gets screwed. And
they're worried about putting food on their table.
They're worried about putting food on the table, and probably a lot of them don't have time to read or listen to my book. They're working 2 jobs, and like I say, the fraud is pretty sophisticated, and so it's tough for those folks. Mm-hmm. But collectively, we're all getting smarter, and collectively, things like your show and the internet and the web are helping to educate people. And guess what? These guys' days are numbered. Bitcoin is a gift, I think, to us that is really going to help us, shut the old system down.
Mm-hmm. And I guess it's not too late then to get in on Bitcoin.
Not at all. Oh gosh, no. Bitcoin's going to multiple millions of dollars per coin. It's at 100,000 right now.
Yeah, and you still like gold too.
I do. Gold will do
because
fine.
You kind of started in gold and gold miners.
Well, you must remember pre-2008, if you believed in sound money, you were a gold bug. There really wasn't any choice. And what emerged is Bitcoin is digital gold. It's just an immutable form of gold. It's a technological development. The book talks about this. And the guys who founded, or Satoshi, or the group of people who we call these Satoshis, who put this whole thing together, they created immutable digital scarcity. And it's not obvious to everybody at first why that's a big deal, but it's a really big deal. It's actually a really big deal. It's a ledger that can't be cheated. And so, in my view, it's going to go up forever. And, if you own a tenth of a Bitcoin today, it's going to be stunning what happens. And a tenth of a Bitcoin today is $10,000. And so, I make a lot of comparisons in the book with other companies that have grown and networks that have grown. Look at the internet. Look at how the internet grew. These networking businesses are different, and networks in general are different. Again, I really, and I'm obviously selling books, but I strongly encourage people to read the book, because I do, it's hard in a brief conversation to kind of lay out all the nuance and the detail of what we got here. But suffice it to say, Bitcoin's a really big deal, and it serves everybody's interest to pay attention. Because I think if you're aware of it and you decide, I'm going to blow it off, I'm not even going to pay attention, I think you might wake up in 10 years and go, oh my God, I heard about that thing. I didn't pay attention. And now I've really got regret. My friend bought it for 100,000. These things are worth $2 million a coin. I think that's going to happen. I know that sounds crazy, but I think it's going to happen. Max Kaiser was telling me to buy it at $2. And I'm saying, Max, you're nuts.
I remember seeing 300 and thinking, oh, it's so expensive.
Right. Exactly. And I know Max thought he paid too much because Trace Meyer bought it for 50 cents. Mm-hmm. I bought my first at 300, and I bought it all the way up. I paid 65 for it recently, before, and I'll when I get some more cash out of something else, I'll probably buy it for 110. So, yeah, it is what it is. And you kind of have to understand it. There's never really been a financial asset like this, because it's a commodity. One's the same as the next. It's a limited supply commodity that's never existed before. And if you think about how other commodities behave, if the price of oil goes up, we'll drill for more oil. The price of gold goes up, we'll mine more gold. The price of Bitcoin goes up, doesn't matter. Same supply.
Fixed. Yeah. Let me let's end on this.
Okay.
If you take the fourth turning framework, we're in the crisis period, if you will.
We are, yeah.
But it leads you into the first turning,
yes.
Which is the spring and that new system. So as you kind of conclude the book, fix the money, fix the world. What are the implications if we can get to sound money, the positive ones?
Oh, I think it's fantastic. I think people don't even begin to understand how good it's going to be when we fix all this. A lot of unproductive things will stop being done. People will know that they can save. I will just say that knowing Bitcoiners and being a Bitcoiner for a long time now, the change in my overall view and mentality. I was always afraid of running out of money. I was always afraid if I retired, I wouldn't have. I don't worry about that anymore. I have Bitcoin and I'm protected. So think about. I think a lot of the world goes through their life kind of financially afraid. Am I going to be okay? And once you really understand what Bitcoin is and how it works, you kind of go, oh, wow, I am going to be okay. I can actually save and it'll be enough. It'll work for me. I know it will. And now that takes a deep level of understanding, but that'll happen. I also think we'll allocate capital more properly. And, I think there's a chance that wars will be decreased. Wars, a big theme of the book, and I show it in the history and all, government has a hard time paying for wars. Are expensive and destructive. There's nothing good about a war, right? You destroy shit and people die. And that's all bad. And so, so if the government were to come to us and say, hey, we want to hold a war. And by the way, you're going to have to send us half your wealth so we can do it. Well, they'd have a revolution on their hands. Nobody would do that, right? But they say, we want to throw a war and we're going to do it with printed money. And so what we're going to do is increase the prices like they did in World War I, where all the prices doubled in the period of that war. nobody realizes that they've been stolen from, but it's subtle. It's through inflation. So, I think there'd be a decrease in the number of wars in the world, and that would be a good thing. It just, to me, it's just, that we're going to be more decentralized. We're not going to have these big, powerful governments telling us what to do. Common sense is going to prevail. We're not going to have the Politburo of the big networks. I mean, people like you, and Joe Rogan and Tucker Carlson and Natalie Brunell and all the other good podcasters out there, people are going to get their information from, honest sources. And so, the larger world is going to have a much better understanding of what's going on. We're not going to do stupid stuff. I mean, it will be, I'm telling you, it's going to be a lot better. It's going to be, say one of the advantages I have, Julia, is, and look, the 70s weren't perfect because we had the Vietnam War going on. This country was so much better 40 years ago. And it was just, it was a much better, it was kinder, it was gentler, it was more balanced. There wasn't, the wealth inequality. There was a greater level of fairness. I mean, it wasn't perfect. I mean, that we had to have the civil rights movement, et cetera. But I'm just trying to point out that, a lot of things have gone in the wrong direction as a result of this huge money grab that fiat money has created. You know what I mean? It's just, it's not, and it hasn't been good. It really hasn't. And, if you go back to a fair system, the good guys win and, the criminals don't. And right now we got a system where the criminals win and the good people pay the price. And that's not right.
Lawrence Lepard, author of The Big Print, What Happened to America and How Sound Money Will Fix It. Thank you so much for being so generous with your time, all of your knowledge, your wisdom, really helping us learn and get better. And for folks watching and listening, go pick up a copy of Lawrence's book. We will leave a link in the show notes.
Thank you.
Larry, thanks again.
Thanks a lot, Julie. I really enjoyed speaking with you and happy to do it anytime.